Okay, so now we've talked about how we get to drafting the agreement. Okay. It is 2:37 p.m. on the second day of talking about this for a day and a bit more than a half, and we're only just starting to write the agreement. Is that skewed? Do we think that, like, am I running way behind? Are you seriously worried? No? Why not?
Because you need all that information, all that data, all that.
We're at that stage where actually the deal is done before the deal is written. So most of the legal issues that we need to think about in order to get to our sale and purchase agreement really need to be thought about, put into the plan and structured well before we actually have the capacity to sign the agreement. So, but we do need to think about a number of the things that get into the agreement. And in particular, we need to think about the warranties and the indemnities that are given, which I'm hoping are on the next couple of slides. So we'll get there. Oh, Catherine. Okay. No, before we get to warranties and indemnities, I've forgotten what order I've done, put things into the slides. I hate slides. I wish they could. I need AI slides that somehow go into my brain and organise themselves, whatever. So, one of the things that we have spoken about actually a couple of times, but I just want to make sure you've got some context around them, is the, which are we doing? Business sale and purchase agreement or a share sale agreement? So we've spoken a number of times about the reasons for making those decisions. I want to focus a little bit more on the differences because I think, again, if you understand the differences between them, then you've got that in your toolkit when you're thinking about which one we use. Having said all that, and I can't give you data because the reality is unless there's a dispute and it goes to court, we don't and it actually gets, the trial gets heard, we don't necessarily know what's going on in these commercial transactions from a legal perspective, other than, actually we've got ASX data as well. But my feel is that we are doing 9, you would see in the market, 9 share sale agreements for every business sale agreement. That most business sale agreements now would be very much at the bottom end of the market, where we're talking about, well, maybe sole practices, so law firms and accounting firms, and small one-off shops, restaurants, small businesses, sole trading arrangements. Okay. The reason why there are so many more share sales is usually because the tax consequences for the vendor are so much better that ultimately that can be negotiated into price. You're prepared to take overall less money if the amount that you end up with in your hand is the right number for you. So that means ultimately that purchasers can pay less and vendors get more for shares than for businesses. But there are times when business sales make a huge amount of sense for some of the reasons that we'll talk about. So we'll start with business sales. What are the primary kinds of issues that we need to think about? We've got to think about what assets, because even though we call it a business sale, we're actually talking about the transfer of assets and contracts from one party to another party, and the difference between the value of those things at market and the total that it actually paid is the goodwill. Working out how to value those assets can be a really fraught part of the negotiation, and there's usually real value in making sure that the vendors understand the value and risk associated with each asset or each material asset early on. What vendors believe their business is worth or what those assets are worth is often quite different from what purchasers will believe for a range of reasons. Oh, I hate a wordy slide, sorry about that. So got here some threshold questions. I'm not going to go through each of them because we will run out of time, but come back and have a look at them. One of the things as an advisor that you want to be doing fairly early on is actually working out whether this is actually a business that can be sold. If it needs to be sold as a business, can it actually be sold? A couple of threshold questions you need to think about with that. Some of them we dealt with employment yesterday. Actually, will these employees move? If you've got a small law firm in the suburbs somewhere, you've got 20 solicitors working for you, and you want to sell it to Slater and Gordon. They've been buying up practices all over the place, little practices doing different things, but your solicitors don't want to work for Slater and Gordon. They don't like them for some reason, or they don't want to be big. They don't want to be part of big corporate. They've all come from large law firms to come and work for you because they like the freedom and they like the boutique nature of what they're doing, and they're not going to move. Then it might be quite difficult, particularly if your solicitors have the client arrangements to sell that practice. Other things that could be relevant is assets that are necessary to do the things that this business does, particularly bespoke machinery or plant and equipment of some sort. Is it subject to finance? Do the terms of those financing arrangements allow for a change of ownership? Is more money owed on the piece of equipment than the value of it for sale? So I saw that. I had a run years ago now of selling businesses that owned printing presses. And there was a period of time where printing presses are really large, expensive, complex pieces of machinery that they're often bought at trade shows in Germany, and then they're shipped. They're incredibly expensive to ship here, and then they get set up and all the rest of it. And it's a huge endeavour, but sort of around the late 90s into 2005, their value just plummeted because people weren't typesetting anymore. The actual activity of printing changed dramatically. So there are a lot of businesses that owed millions of dollars on their printing presses, but the printing press itself really had very little value. And so those businesses were better on continuing on trading and getting what work they could than they were paying out those leases. So you've got to understand those kind of things. What else? What kind of transaction documents do you see? Often there is more, well, almost always there is significantly more documentation when you buy and sell a business. Because when you buy and sell a company, you just need to buy and sell the company, and the company owns all of the assets underneath. It still has the employment contracts and all the rest of it. But when you're buying the business itself, you need to document the transfers of the land, the machinery, fit out. You need to move money from one bank account to another bank account, or you need to work out how that's actually going to happen as you've got the takings, particularly retail businesses where you just pick a moment in time, and after that point in time, every cent that goes in the till belongs to the new owner, and every cent beforehand. So lots of documentation issues like that. Contracts. We talk about this a little bit in contract law, where actually part of your due diligence process will be around identifying what contracts need to be transferred. So can you just sell an obligation under a contract to somebody else? No, you can't. I'm so glad that people learn something. So yeah, you can sell a right. If you have a right to something under a contract, you can transfer that to a third party. That's not hard at all. But you cannot transfer an obligation under a contract. If you have an obligation under a contract, you can't sell that obligation to somebody else. So you need to make an assessment of what you do about that. The easiest or the most effective way to do that is to novate. So to use a deed of novation, where effectively what's happening is the party who has the obligation requests the party who has the right, the corresponding right, that they can transfer that obligation across to somebody else, and promises to hold that person harmless against any loss or damage accruing up to that point. And then the new party coming in promises that they will take over the obligation and take on the responsibility for any loss or damage going forward. Now, in a big business, you could have had hundreds and hundreds and hundreds and hundreds of these. What actually happens in practice is usually part of the due diligence exercise will be working out what material contracts need novation. So some of them are kind of obvious. Your lease, for example. If you are selling a shopping centre and the shopping centre has hundreds of shops in it, each with individual leases, and you are selling the business, not the company that owns the shopping centre, quite a usual kind of transaction really, then each of the leases will need to be novated because the landlord has obligations to the tenant just as the tenant has obligations to the landlord.
Usually some business.
Sorry?
So usually some business is such because all the leases then have to be assigned.
Yeah, so they're either novated or they're assigned across, absolutely. So assignment is your other option, which is just, yeah, so it's easier to sell the entity, but just say you don't. The other way around though, if somebody is running a shop and they sell their business, then usually they will need to get the landlord's consent to the novation of the lease. And in fact, most leases will say, in that kind of scenario, if you change ownership, you have to get our consent anyway.
There's provision under the Retail
Oh,
Leases Act.
Retail Leases Act has changed. I see, I hate it when there's legislation that I know nothing about.
So you have
So-
to request.
You
permission
can't be
from the
unreasonable.
landlord which must not be unreasonable.
Yeah, so you can't do it unreasonably. It used to be, see, this is what I like about contract law. You can be unreasonable if you want to. You make a promise. If I made a promise to you, I have to keep it, but I don't have to keep it to him.
It means a no assignment clause in the lease.
Yeah.
So they have to give it back to the landlord.
So again, and it depends on what the contract terms are, absolutely, but they're the kinds of considerations you're making. When you've got lots of suppliers, say you have lots of contracts to, I know one, I acted once for a company that sold sporting goods, musical instruments and textbooks to schools. And they had just basically, they sold school supplies and they just ranged out. They had actually 3 businesses and they spun out technically the musical instrument business. So they kept on their sporting supplies and their stationery and they spun out the musical instrument business. So they had contracts to supply brass instruments to different brass bands and to continue to fix those instruments if there were issues with them. And they kind of looked at them and thought like there were so many of them and it was just going to cost them money to do it. And they just made a call. Look, at the end of the day, we're buying the name, we're buying the phone number, we're buying the website. We're going to promise each other that if there is an obligation to repair those instruments under these existing contracts, then we will fill it out. But we're not going to go through the process of advising everybody that there's been a change. And they wore it. They just decided what the risk was. I never heard of there ever being a problem with it. It was just completely commercial arrangement. So, but if they'd been material contracts, where if there'd been one major supply arrangement that if that had fallen over, the business would go under, I think that would have been a very different result than when you've got hundreds of contracts, no single one representing more than 5% of your entire revenue anyway. You can afford to lose some of them along the way.
But could that, if the supplier or one of the counterparts who are in a material contract doesn't agree to the transaction, or doesn't, can it just go?
Well, and that's often part of what the conditional, what the conditions precedent are. So often, so the question was if one of the parties to a supply contract or a customer contract like that doesn't want to go ahead and you're trying to assign or novate that contract, what happens? If they don't want to go ahead, if it's sufficiently serious, you will make that a condition precedent to your agreement proceeding. And then your agreement won't proceed if they don't give approval. Also, the other thing that you need to work out is what intellectual property licenses you might have and whether or not you've got the ability to transfer them. There's a very famous case of Was it Daimler-Benz selling their part of, it was Daimler-Benz sold the business to Chrysler, or Chrysler sold their Mercedes business to Daimler-Benz. Can't remember which way around it went. They sold all of the IP about how the motors work and the customers and the machinery and everything, and they didn't transfer the trademark in the hood ornament. So basically, they had no rights, the purchaser had no rights to put whatever the hood ornament it was for whatever car it was. I've got a feeling it was Mercedes, but I could be wrong. That's clearly a very valuable thing. So it ended up with a whole separate negotiation afterwards to pay for or transfer that, because of course the vendor was saying, well, you didn't buy that. If you'd wanted that, you should have made sure you got it, because that's not included in the price. If we'd known you wanted that, we would have asked you for more money. So again, very important part for the lawyers is also working out what it is that people need, what this business really is. AFSL there stands for Australian Financial Services Licence. So it's just an example. One of the other things that you need to think about with buying a business is, do the owners of this business have to have a particular qualification in order to run it? So, for example, a legal practice, you can't sell legal services unless you've got a full practicing certificate. So you need one of those. One of the things I was seeing happening a little bit when I first started working here, which I thought was really interesting, was number of students who had basically entered into arrangements to buy a practice when they finished, on the basis that the retiring practitioner would supervise them for their first year until they got a full practicing certificate, and then it was at that point that they would hand the business over. I saw 3 or 4 people do that. Yeah. Well, it's a business. Your clients need to decide whether or not they're going to work for, be prepared to. Yeah, but it's completely possible to do it. Does it work? I know of at least one that ended in tears, but I think managed well. Yeah, you need to know, well, and that they will in fact supervise you properly. And that they will in fact then retire and move on later, and that they do in fact have the practice that they say they do. It's the same risks associated with buying any business, really. What kind of legal issues do you see in business sales? There is a range and breadth of them. At the end of the day, part of this, I think, I hopefully have you convinced of now, is that you can't buy and sell things without some element of due diligence, whether that's done formally or informally. And due diligence does 2 things. It helps you value and work out what it is that you're buying, but it also throws up things that might need to be fixed. So quite often, a lot of the frantic running around before a business is handed over is about doing stuff that is really kind of legal or compliance housekeeping that should have been done beforehand. The last 3 transactions I've been involved in, and I don't know if it's because it happened in the first, so I asked the question in the second too, have involved frantic running around at the very end. This is both for business and share sales. 2 of them were share sales, where the businesses had very active social media accounts. One of them was a retail business that had a very active Instagram following, and that was a huge part of its marketing ploy. And it turned out that the accounts were not held by the owner of the business. They were held by whatever individual it was who set up those accounts at the first place. Now, my guess is that if any of you are involved in businesses, you might like to go and think, who is actually the account holder for this now, as it turns out, quite valuable asset that I have, my Facebook account or my whatever. I'd be really interested to know who Apple's Facebook account is in the name of. Not, because you can't actually, because of the way that those things work, they would have sorted that out.
Yeah, but I can see what you mean though by, my friend has her own small business, and obviously pretty sure her Instagram is in her personal email. So,
Could well be.
but she's the CEO, but she also is a joint partner in the.
It's actually quite hard to open a social media account in the name of a company. It's an individual. And even when they set it up with their work address, the individual is the one who holds the passwords. Or they can. It depends on, again, on how it's set up. I think this has become something that the social media providers are aware of. Well, look what happened to Donald Trump, 6 weeks ago or so. He was off air for 11 blissful minutes when a previous staffer decided to change the password on him. And it's like, it's kind of a risk. It's not a huge risk, you wouldn't think, but it's something I've seen. Given that the last 3 I've done, that's the consistent issue. It just seems to be one that I think I should point out.
It's also in the way, I guess, that those particular apps are set up because of the, obviously Instagram's owned by Facebook now, so the verification process is through Facebook.
Yeah.
So obviously you have to have an identity, you have to be a person. I don't know, I haven't actually looked at it from the side of being like, okay, like we've got a page for our company. I haven't looked at it from having that account and trying to then set up the Instagram. I think you would still have to have a person involved in that step.
Yeah.
So yeah.
Look, and they might have, they might have changed it. I've looked at it as the issue. I haven't looked at it from the other side, but it just.
On Facebook, they've got some like parties on there, so political parties. So must wonder who owns that.
Well, nobody owns a social media account. You have a license from a software provider, a cloud provider, to use a service. But you do sign up as an individual.
Yeah,
so
there was quite a few issues with on the Instagram. I know that when you were like making an account for that the first time, if you actually read the terms and conditions, you were licensing all of your photos to Instagram. So a lot of artists that were using that when they sort of started realising that and they were being used in campaigns and things through Instagram, they were quite, distressed, I suppose, in terms of their work being used without credit, but they had actually signed away. They had assigned those rights already to Instagram. So
look, and there's been, again, we could get off on another topic quite easily here, but there's been a lot of, I guess when you've got a new business model, a new way of communicating, and something that was initially designed for a different purpose, it was designed, social was designed to be social, not necessarily for advertising or for business collection purposes. Very quickly, then they worked out, we have to monetize, what do we do? But there are these flow-throughs. Yeah.
Because I know quite a bit of the changes that went on with Instagram when Facebook was acquiring it. So they've completely sort of changed the direction, well, not completely, but they've taken a lot of the direction of the company in a different way than it was originally intended to be, a sharing platform just for pictures. So
it's
that disruptive sort of, well, now we can make this a business and you can make accounts.
Look, and I think in an M&A context, this is a really important point. I'm really hoping that got picked up on the recording. But I think that when we look at businesses and people are buying and selling businesses, when you think about the corporate lifestyle cycle, when a business was formed, somebody had an idea that they were going to sell widgets to Pidgeots. And then over time, the Pidgeot market went down and they've realised that the widgets could be sold to Ziggets or used in a different way. And the business has morphed, but they haven't necessarily gone back and thought about how that impacts their structure or their user agreements or their contracts. So I have a client that set up a really interesting business to match, somebody I did my MBA with actually, who matched people who were looking for bespoke furniture and art with artists, sculptors, furniture makers, jewellery makers. It was sort of, the business is called Maker's Lane. It was sort of marketed like a retail business, but actually the underlying business model was she was a former property developer, and so she was really, what she was doing is managing the bespoke elements of interior decoration for shopping centres, major buildings, things like that. Anyway, it was a harder business to do than she thought it was going to be, and over time she had this other idea around building essentially an algorithm that would look at what the best property configuration was for a new development. So how many penthouses, how many two-bedroom apartments, whatever, for a particular development. And this idea is completely taken off. She's doing it in the same business, even under the same website. I'm pretty sure that the original terms and conditions, which related to getting furniture custom built, are now being used for the use of testing this algorithm, which I think she can probably make a lot of money out of. So again, so if she's going to go and sell that, an owner of that business, before they even come in, is going to say, look, actually, before I listen to how many customers you have or what your value is going to be, I want to make sure you get your contracts right. And so that's kind of that point. Disruption, pivoting, it's great, making the world a better place, but sometimes we have to, and that's the boring, dirty work that we have to do, is stop and think about that and see what that means. I think you guys need a cup of tea or something shortly. Where do I just want to see? Yeah, basically, you think about an issue and chances are it can come up in this area. And I'm hoping that that came through in our discussions yesterday as well, that you don't have to be the expert. The M&A lawyer doesn't have to be the expert in everything. The M&A lawyer needs to go out and get expertise when they need it. But again, I think, and this came out of our conversation this morning, the value that we bring and what people are looking for in this space is being able to see where the gaps are and be able to see how the different areas of the business relate to each other and where the risks might be. I had forgotten that I had just one other point that I wanted to make. Firstly, just finishing here, I had listed prior to this a list of different kinds of areas of law. Worth pointing out that every specific business will have areas of law that are relevant to it. So if, for example, you are acting for someone buying or selling a restaurant, you will need to then look specifically at council regulations in relation to how many people they can seat in a restaurant, or whether they have a liquor licence, or food, health and safety. Issues that you would never look at if you were buying one of the most interesting things I ever bought was a flying school. So where I had to actually look at whether or not the buyers had the right licenses to operate a flying school and what kind of qualifications people had. And it was quite interesting because just after they signed the contract, there was, this is many years ago now, an issue came up in relation to the fuel that was used in small aircraft. Some contamination had been found, and all small aircraft in Australia were grounded for about 3 months, which created all sorts of dramas, but particularly when you're in the middle of buying a flying school, it was quite traumatic. Anyway, back the other way. So you need to think about not only the broad church of issues, but issues that are specific to the business. The last point I wanted to make in relation to buying and selling businesses is a large part of what we do in lawyers when we are documenting the agreement is documenting what the purchase price means. It is very rare in any transaction that has any level of complexity at all to just have a number. Okay, I'll pay you $1 million, you'll hand over the keys, we'll be fine. Particularly with sale and purchase agreements for assets, there will be adjustments. So there will be often a headline number, and then at completion that will be adjusted plus or minus by reference to the stock on hand, the actual amount on hand at the day. So what will often happen, and you might want to have a look at how it's done in that precedent agreement, what will often happen is that they will pick a number, the number will be based on the assets having a value of X, then often after the documentation has been signed, even after the handover has happened, there will be the stock take or the valuation that will occur, and then if there is a difference of more than Y between X and the actual valuation, then there will be an adjustment to the price then. You might also have, we've talked about earn-outs a couple of times, where there might be a staggered payment price based on somebody continuing to work in the business. I told you the story of Savage River yesterday, one of the first ones I was involved in, where the business itself had a negative value. So the vendor actually paid the purchaser to take on the assets because of the subsequent cleanup issues. Yeah, so getting that right is really important. The best piece of advice I ever got as a junior lawyer from a more senior one was to always plug numbers, real numbers, through the formulas that you use in the document. Because you will need to essentially write the formula for how that adjustment will work. And it's really important, particularly if you're not overly comfortable with the numbers, to make sure that you really understand what the parties have agreed and that the documentation reflects that. Because if you don't, that's a professional liability issue ultimately.